What is good, guys? Welcome back to the channel. I hope you're all doing good and having an amazing day. Now in today's video, we're going to be taking a look at something which I think is one of the most important things you can do as an investor and trader, and that is tracking your investments and portfolio growth. Most investment platforms out there these days try to provide features to this effect, but they are often limited and leave you wanting more usable information. So for this reason, I believe tracking your investments is absolutely crucial in being able to gauge how effectively you're investing. Now I know a lot of people don't actually bother to do this for one reason or another, especially as it can get quite complicated and confusing if you're not necessarily a maths genius. But to make the whole process a lot easier, what I've done is made a Google Sheets template that is able to calculate all of the things that I feel are really important to know about your investment portfolio. So this includes simple return on investment, monthly returns, annualized returns, and finally how your total portfolio is performing compared to the indexes, taking into account when you deposit or withdraw money from your portfolio. So I'm going to run through exactly how this spreadsheet works and explain the importance of each feature as we go through. But if you guys are interested in downloading this for yourself and inputting your own numbers, I'll leave a link down below in the description to the template. Now just before we get into it, I know it is a bit cheeky asking before the video's even started, but I'd really appreciate it if you guys could smash that like button down below, as it does really help me out with the YouTube algorithm and basically just allows YouTube to share these videos to more people that might find them useful or interesting. And as always, if you are new around here, make sure to hit that subscribe button down below and click that bell so that you never miss a video. But with all of that out of the way, let's get into the video. Okay, so here we are on Google Sheets in the template that I created. So the first thing that we're going to look at, and what this spreadsheet can do, is calculate return on investment. So what this means is, as a percentage, you'll be able to see how much return you've made from a single investment. And this can be really useful in seeing how well your investment is performing compared to other indexes. So what you're going to need to do with this template is basically keep track every single month of the investment value, starting with your initial investment. So all of the columns in green, you're going to have to put your own data into. So I filled this in with made up numbers just as an example. So assuming that we started investing on the 1st of January 2020 with £1,000. So all you're going to do at first is fill in the initial date that you started investing and how much you're investing. And then from there, all you've got to do is once a month keep track of how your investment is doing and just type in the value and the date that you're tracking it. So what I'd suggest doing is put this information in as close to the same day on every single month, once the market is closed for the day. So you can see for this investment, the value has slowly increased month by month as we go down the calendar. And then so moving over from this, we'll see the return column, which shows how much percentage return you've made from that investment. So we'll start with 100%, which is basically the value of the investment to start with. So essentially after the first month where it says 102, that means it's up 2%. And then so over time you can see as a percentage how well your investment's doing. Now this data is somewhat useful in its own right, but where it gets really useful is when we compare it to other indexes. So what I've done is created a separate set of columns for specific indexes that I want to compare my investment against. So for this example, I've got the S&P 500, the FTSE 100 and the NASDAQ 100. Now all of these share prices for these indexes is coming directly from Google Finance, specifically on the dates that we've chosen to track our investments. So you can see that this column relates to the date and Google Finance for that index. And then so what we can do with this information is basically create a chart to visualize how well our investments are doing compared to the indexes. So you can see here our portfolio is the blue return line, and then we've got the S&P 500 in red, FTSE 100 in yellow and NASDAQ in green. So you can see to start with we've done pretty similar to the rest, then significantly outperformed, then pulled back and then carried on outperforming all of the indexes. So if you've run out of rows and you want to add more data, it's really simple. All you need to do is highlight the bottom two rows and then just drag it down once you see that little cross, and then input whatever data you want. So whatever day you're tracking your investment on. So let's say it's the 1st of February 2021 and then the value of your investment on that date at the close. So let's say it's gone up to £2,000. Then we'll see that automatically updates, and so does the chart. If that was the real scenario, you were significantly outperforming all the indexes, so that's quite positive. And so if I change those numbers around, you can see that reflected instantly in the chart. So let's go 150. So it's lost all of its value. So if you want to change one of the indexes that you're comparing your investment against, it's really simple to do. All you need to do is head onto Google Finance. So for this example, let's use the Dow Jones. So find the Dow Jones, and then once you're on it, highlight this bit of code, copy, then come back into Google Sheets, double click on this share price at the top, and then basically just swap out this code for the new one that we've just copied. And then just take away that space in between the colon and the dot. And then that should do it. So then that just changes the share price from being the S&P 500 to now the Dow Jones. And then all you need to do is drag down that column, and then all of it is tracking the Dow Jones. And then so from there, you've got the Dow Jones compared in your chart rather than the S&P 500. So I think tracking return on investment like this is really useful, but what this part of the spreadsheet doesn't do is take into account any cash flow. So this could be additional money going into your investment if you want to invest consistently each month, or money coming out. So if, say, you sold some of the investment and withdrew some of that money. But this method might be sufficient for some people if you have a sum of money that you've invested and want to just leave it over time without touching it. But if you do have movements of cash within your investments and your portfolio, don't worry, we'll move on to this next and how you can take these into account. So now onto the next page of the spreadsheet, we have the portfolio returns. Now it is somewhat similar to the first sheet we looked at, but it's just got a bit more going on. So just like with the last one, everything highlighted in green, you're gonna have to put your own information into. So firstly, we have the date, which is exactly the same as before. So all you're gonna need to do is keep track of your investments once per month, and then just fill in the day of that month that you're keeping track of them on. But then what I've done here is I've created an example, assuming that you have multiple investment accounts and want to keep track of your entire portfolio as one. You don't have to do it this way, and you can keep track of individual portfolios if you want to, but I personally just prefer it this way as it makes life a lot easier if you have different investment accounts and just want to generally see how you're doing as an investor. So for this, all you're going to do is simply just fill in the balance of your particular portfolio on the date that you're tracking it. You're not going to worry about individual investments, how much of the money is invested or sitting in cash. You just literally take the total balance and put it into this column. So we're assuming we're starting with £1,000 in an AJ Bell account, £5,000 in Hargreaves Lansdown, 250 in Free Trade, 2,000 in Trading 212, 5,000 in Fidelity, and then £500 in Coinbase. And so whatever figures you put into this, it will automatically update into the column on the right for your total overall portfolio. And then so the final thing you need to do is basically just keep track of the cash flows going in and out of your investment accounts. So cash flow counts as any money being deposited or withdrawn. It doesn't include any dividend payments if the money is remaining in the account or fees being charged, just simply money that you're withdrawing or depositing into the account. So for this example, in the first month of January, no money was going in or out of the account. Then in February, £100 has been deposited. And then in March, £200 has been deposited, and so on. And so if you have taken any money out, all you need to do is simply put in minus however much money that is. So let's say £500. And then it will show up and update everything automatically. So the next thing you can look at is accumulated cash flows if you're interested in knowing how much money has been deposited into your account over time or withdrawn. So it will simply just add up all of the cash flows over time. And then next up, we have the percentage change per month, which I think is really useful. So what this does, it takes into account all of the positive or negative cash flows and works out how much percentage up or down you are on the previous month. So you can see to start with it's 0 obviously, and then the first month we're up 4%, then up 10%, and so on. So following on from the returns per month, we have the percentage change over time. So this is very similar to the first page we looked at, where it gives you the overall return over time. But what this does, it takes into account all of the cash flows going in and out of your accounts and updates automatically. Now again, just like with the first page, this is only somewhat useful on its own. Where it gets really useful is when comparing this against other indexes and other investment opportunities. So what I've done here is created a few columns for specific indexes that I'm personally interested in comparing my portfolio against. But rather than just displaying the simple return over time of these specific indexes and how the share prices have increased or decreased, what this does is it applies the same conditions that your portfolio has been under in terms of cash flow moving in and out of the portfolios, but to these indexes, as if you'd invested that same amount of money directly into these. So this will show you exactly how well your portfolio is doing compared to other indexes, and quite quickly it will become clear as to whether or not it was worth you investing for yourself, or if you'd have been better off just investing straight into an index. So just like before, on the next tab, I've created a chart that compares these in chart form so you can see it as visual data rather than just numbers. So for this example, our portfolio has done significantly better than all the other indexes, except for the NASDAQ 100, which at points has outperformed it. But at the point they're at now, they're actually fairly similar. So to calculate this final column of the indexes, assuming they've been invested under the same conditions as our portfolio, I've created a back-end calculator which you shouldn't need to touch, which inputs to this page. But when you do need to add more data to your spreadsheet, all you need to do is, just like before, highlight the bottom two cells and then drag them down by 1. And everything will update automatically once you put in your own figures. So all you need to do is select the date and then the value of each of your portfolios. So let's just leave that at that and then change the cash flow to 0 just to see how that goes. So we can see that changes it to 3% up and 144%. but you can see the index column hasn't updated. So all you need to do is head onto the index calculator back-end part of the spreadsheet and just do the exact same on this page. So highlight the bottom 2 columns and drag that down by 1. So you can see this row has now filled itself in, and the chart is also updated as well. Right, so the final tab we have in this spreadsheet is the annualized returns. So this is something I use at the end of every single calendar year to basically work out how much % up or down I am on my investment portfolios. And again, this takes into account all cash flows going in and out of your portfolios. So for this one, all you've got to do is start off with the top row and fill in the date that you want to start tracking your investment from, and then the portfolio value on that date. And then so from there, all you want to do is fill in the dates in between where you're measuring, and then mark down the cash flows for each of those months. So you can see we're starting off with a portfolio size of £13,750, and then below that we have all the cash flow movement each month in that year. And then finally at the bottom, this row highlighted in yellow, we want to put the date where we're ending the calculation, and then the final portfolio value at the end of that year. But what you've got to do, which is a little bit weird, is put a minus in front of that number. So you can see we're ending with minus £33,650. And then finally, once you've got all this information put in, at the bottom we have the annualized returns in blue. And you can see we're up 47% on the year, taking into account all cash flows moving in and out of the portfolio. So what I do is at the end of every single year is simply just copy and paste this down and input my numbers for that year. So then over time, I'll have documented every single calendar year that I've been investing and how much return I've made for that year. But there we have it. That basically covers everything for today, guys. And I really hope you found this one useful. I know it can take a little bit of perseverance to get your head around some of these ideas, but I feel the information that it can give you is invaluable and it's really worth doing. Now, if you did enjoy the video or feel like you learned something new in any way, I'd really appreciate it if you guys could smash that like button, as it does really help me out with the YouTube algorithm and just allows YouTube to share these videos to more people that might find them useful or interesting. And as always, if you are new around here, make sure to hit that subscribe button down below and click that bell so you never miss a video. I'd also love to know what you guys think about this topic down below in the comments. So do you already track your investments in a similar way, or do you think it's something you might try now? I'd love to know, so drop your thoughts down below. And if you do have any questions or feedback for me, I make sure to respond to all comments. But with all that being said, take it easy guys and keep saving.